So when I introduce Roth IRAs, I usually entice people by telling them, do you want to make as much money as possible? Because the Roth IRA is the account for you. GameStop to the moon, AMC to the moon, all our stocks to the moon, Dogecoin to the moon. That is not a stock though, doesn't matter, to the moon. I feel like I'm JFK, cause I'm headed to the moon. What's up, curious people? We are investing in stocks on this channel, and if you're new here, well, now you're not. It's really nice to meet you. So I'm gonna show you my Roth IRA. I'm gonna show you my. Let me check my notes actually. What we're gonna. I just ripped my notes. Let me check my notes. What we're gonna talk about today. So we're gonna talk about my portfolio. I'm gonna show you my Roth IRA. That's a good idea. I'm glad I wrote that down. I'm gonna define Roth IRA, what it really is, and all that. First, I'm gonna excite you though, right? That's why I'm showing my portfolio, showing you how some of my money doubled, tripled, and even times 7'd. That'll definitely motivate you guys to like and subscribe. I'm going to talk about some restrictions to the Roth IRA and how to diversify the long way and the short way. So that's going to be a lot of fun. How to keep your money safe in your Roth IRA once you have some wealth inside of it. Let's get started. I'm going to show you what's inside of it in just a second. I just wanted you to see that my total contributions was $12,000. I got some dividends paid out to me, about $112, and I have grown my portfolio, or my portfolio has grown itself because I was busy doing my 9-to-5 thing, by $6,000. Okay, let's look at the actual positions now. Okay, here it is. This is my Roth IRA. I have maxed it out 2 years in a row. That's $6,000 and $6,000, making a total of $12,000 invested. Notice that there are no index funds, no ETFs. It is all individual stocks, and there is one REIT. There's Hannon Armstrong right over there. So the reason behind me having such an aggressive move to begin with is I am a long-term investor. I'm going to be doing this year after year after year. Hopefully I'll stay healthy for a very long time and I'll be able to do that. But assuming that I will stay healthy, I will be investing in my Roth IRA for decades to come. And my investments will grow more conservative as time moves on. So let's look at the dollar amounts and the percentages. So we see Overstock is about 3.4%, Farfetch 2.9%, Twitter a whopping 15% of my Roth IRA, and then of course the highlighted stock is Nike. I think I just fused Nike and the word stock at 33% of my portfolio. That is huge. Then going a little bit lower, we have Coca-Cola, Verizon. Those are dividend aristocrats. Those are actually the positions and types of stocks I want to be buying in this type of account because you don't pay any taxes on dividends. So let's look at the actual dollar amounts now of how much I have of each one. You can see here that right on top there's Overstock at $619, but look at that percent change. Look at that right there, 700% change. That means it went up times 7 since I got it. There are some significant gains and profits over here. Pretty unreal stuff. We see the biggest one is Nike when it comes to dollar amounts at $2,000 of gain, but only 51% returns. And when I say only 51% returns, that is huge. Remember, the stock market itself, the general S&P 500, the top 500 companies, they give about 10% returns on average annually. So 50% returns is basically 5 years of investing that I got in 2 years. Why? Because I was extremely aggressive and took on this risk. I was okay with seeing the reverse. And actually, I did see the reverse. Check this out. Here is the cumulative time-weighted return. I am close to 120% returns in my Roth IRA after 2 years of investing. Again, unreal. My money has more than doubled. This is just next level stuff. You can't expect this when you're just investing in index funds. It is very rare for this to happen, but I was comfortable with an extremely high turn of events. You see right there, March 2020, that is the pandemic that occurred. Right before that happened, I had about $8,000 in my Roth IRA, and it crashed all the way to $4,500, and I was able to tolerate that. Why? Because I'm investing for 30, 40 years. I'm okay
okay if my money is halved once every 10 years. Odds are that will likely be happening, but my swings are going to be way more because I'm exposed to individual stocks. On the upside, I may be exposed to more returns as well, and that certainly seems to be the case right here, as the purple line represents the S&P 500 with about 57% returns, which is phenomenal, by the way. That's basically, I don't even know how to describe how great that is. Again, remember the S&P gives about 10% returns annually on average. Compared to my investments, which are closer to 120%, that's very far off, but that's okay. If you do invest in the S&P 500, that is a really solid choice, and most of the time, you're going to beat people like me who are taking huge risks here and are able to watch their money basically become halved right there.
Okay, come closer. We're going to get personal for this. A Roth IRA, individual retirement account. But that's just street talk. It really stands for individual retirement arrangement. Now that's pretty cool to know. Now if you didn't know that, drop a like below for the fun fact. So a Roth IRA is where you can get the most amount of growth because you pay zero capital gains tax. Now, when you sell a stock under a year, you usually owe hecka amount of money. And by hecka amount of money, I mean it equals whatever you pay your income tax. That's how much you're going to pay. That sucks because you're giving the government money for no reason. What are they going to do with it? I don't know what they're going to do with it. I don't trust them to do something with it. That's why usually when I buy stocks, I hold them for at least a year. But in a Roth IRA, doesn't even matter. If you want to hold a stock for a day and it miraculously doubles and goes to the moon, well, you sell it and you owe zero taxes. That is amazing. But there's a catch. With a Roth IRA, you can withdraw the profits only at age 59 and a half. And it must be in the account for at least 5 years. So what does that mean? That means if you're 57 and you're investing in a Roth IRA, well, you got to wait until you're, what's 57 plus 5? 62. Here's another cool thing about the Roth IRA. You can withdraw your contributions at any time. That's good to know. So if you put $500 into the Roth IRA and there's still $500 in it tomorrow, assuming your investments haven't changed or gone up, you could take that money out. That's cool. There's also limits to how much you could contribute to the Roth IRA. Currently, it is $6,000 a year. You're going to be protected with this Roth IRA. You are diversifying tax-wise, meaning whatever the tax rules are in the future, let's just say Bernie Sanders gets elected, or maybe, I don't know, one of his twin brothers or something like that. They all look the same when they're working in a, you know what I'm saying. That's a different TED Talk. But the moral of the story is, eventually, if there are policies that increase how much taxes you have to pay on your retirement accounts with a Roth IRA, you are safe. And I'm all for that. That's why I try to max out my Roth IRA every single year since I found out about it about 2.5 years ago. So I've been doing that, and I thought it was too good to be true. I was like, you pay no taxes? Are you serious? Okay, let's go. People usually underestimate how long they're going to live after age 59 and a half. We have people living to 100 more and more. I want as much money as possible. So there are limits to who can contribute to a Roth IRA. If you're earning over $140,000 in the year 2021, well, you can't invest in the Roth IRA. You have to go into the traditional. Wait, there's a trick. Oh my gosh, I don't know why this is legal or how this is possible. If you put, say, $6,000 into your traditional IRA, you could call up your brokerage, Fidelity, Vanguard, whoever it is, not Robinhood, because they don't have Roth IRAs or traditional IRAs. You could call them up and tell them, I'm trying to roll it over. I'm doing the backdoor IRA. Can I get this through the back door into the Roth? They'll be like, yeah, we don't know why this is legal, but you can do it. So you take the money that you put into your traditional IRA and put it into your Roth IRA. Totally cool. You will pay the income tax, by the way. But other than that, now you have this tax-free growth. Awesome. So diversification. Earlier I said I'm doing what's known as, it's actually not known as this, I made it up, long way diversification. I'm investing in this Roth IRA for at least another 31 years at the time of making this video. I am okay with taking huge and incredible risks during my first 5 years of investing. I'm okay with that. I will get more conservative as time moves on. In fact, a really cool financial advisor once told me it takes a lot of money to truly diversify, at least $500,000. Now, whether or not that's true is up for debate and discussion, but there is wisdom in that. It takes a buttload of money to truly diversify. I think I'm getting closer to a buttload of money, so I am buying more index funds and things like that. However, I tend to buy index funds in my taxable brokerage account because I can use this concept known as tax loss harvesting, meaning I can sell my losing index funds and buy other index funds, writing off the difference. And it's a really cool thing called tax loss harvesting. I do have videos on those types of concepts. You can check them out right here. They're probably popping up right about now. At least I hope they are. And if they're not, I'll probably drop the definition in the comments below. So definitely scroll through the comments and leave a comment of your own. But you can diversify ASAP too. So here's what I mean by that. You could just buy the US index fund. The ETF for it is VOO. You just have the top 500 companies right there. That's pretty good. You could do some research and get some international funds. That's great for diversity as well. Did I say diversity? Diversification. Yeah, it's good for that, and you're basically good to go. There's 100 years of history saying that you're gonna have pretty good returns. All right, now with that, if you have enjoyed this video, don't forget to like, comment, subscribe, and follow Funancialism. All right, let's go.
I'm a lazy boy, all my money working for me. Chilling on the couch, what's on Rick and Morty? Swimming through the cash like my name Dory. Doing what I'll do, I'll retire before 40.